Hello and welcome to this Your Overseas Home webinar, focused today on managing your finances and money when making the move to Italy. My name is Hannah Armstrong and I'm one of the team here at Your Overseas Home, and you may have come across us as Your Overseas Home, and you also may know our sister business Property Guides. Now, as a whole, as a group of companies, we've been assisting buyers with their overseas purchases for nearly 15 years now. We aim to offer you the up-to-date advice and resources that you'll need, make connections with industry experts for you, and crucially, just make it as enjoyable and fun as possible. So we're delighted to have you all with us today, whether you're listening in live today on this sort of slightly sunny Saturday morning here in the UK, or whether you're catching up with us on demand. Whatever it is, we're delighted that you're making the move to Italy and that we're able to help and support you with this. Now, today I'm joined by two of the industry's leading experts on this topic. First up, you'll hear from Paul Harris of Smart Currency Exchange, and our second speaker will be Daniel Shillito. Now, for those of you who are with us live today, if you've got any questions for Paul or Daniel, do please pop those in using the questions tab on the right-hand side of your screen. And over there, you will also see a section called polls. We've got one quick question that we wanted to ask of you, the audience, today, which will help us to tailor and tweak today's session slightly. So do pop your answers in there. It's all completely confidential, but it's just really helpful for us to sort of understand where you are in your buying journey. So without further ado, I'd like to hand over to our first panelist today. So first up is Paul, as I mentioned, of Smart Currency Exchange. Now, Paul has been helping customers and buyers manage their currency transactions for over 10 years now. He and his team at Smart Currency Exchange are based in the UK and are on hand to help our buyers today with any type of exchange or transaction that you might have. So welcome today, Paul. Can I start by asking you to give us a bit of background and a bit of an introduction into Smart Currency Exchange?
Thanks, Hannah. Morning, everyone. I'm going to talk to you this morning about how Smart can help you with your currency transactions, but most importantly, how we can keep your costs as low as possible when you're transferring funds over to Italy. So a little bit of background about Smart first. So we've been foreign exchange specialists for over 15 years now. And in that time, we've helped over 40,000 people in exactly the same position as yourselves to achieve and afford and buy the dream property overseas. So lot of background in the property industry in Europe, especially for ourselves. So we don't just stop at the currency transaction process. So if you are speaking to your account manager on the phone and you're having certain challenges along the journey, with the trader or account manager that you're speaking to is fully versed on the buying process for Italy, and anything that they don't know, we do have a vast partner network that we can certainly put you in touch with and help you out along the journey as well.
Brilliant. Thanks for that intro, Paul. So just to sort of kick us off, I suppose, how early on should customers be thinking about currency? You know, is it something that they just need at the end when they're completing on their purchase?
We say as early as possible to speak to ourselves, really. The best example I can always give is if you start the process, you start looking at properties online, or you speak to an agent, you'll have a type of property in mind, you'll have a type of area in mind, might have a certain amount of bedrooms, might have certain amenities close to certain shops or a swimming pool or whatever. There will always be a price point that you'll be searching for as well. So you'll be looking at prices online, they might be priced in euros. So we can help you straight away understand the affordability based on your UK sterling budget or whichever currency you have at the time, and really work with you to see how much things are going to cost. And the earlier that we work with you, the more chance we've got at sort of pinpointing certain points in the market, which again will keep the cost as low as possible. So as soon as you're on the journey, it's definitely worthwhile having at least an initial conversation with ourselves.
Great advice. Thank you so much. And in terms of the different ranges of products and transfer options that customers have, I know from the past that Smart have got a sort of whole breadth of different things they can offer. Can you just talk us through quickly sort of what those different options might be for clients?
Sure. So for those of you that may have done some research already, you may have seen spot or forward contracts. They're two of the most common contracts that we would book. A spot contract is essentially a quick contract. You would agree a price today, send the money straight away, and as soon as we receive the funds, we'd send them straight out to where they need to go. Really quick and very efficient process. And it obviously is something that we can do for small, medium or large transfers, absolutely, whichever works best for you. One thing that our most popular product is a forward contract, certainly with property buyers. So, for example, just give you an example, you're on a viewing trip in Italy or a virtual viewing trip. You find the property that you like, fall in love with it, right, I'm buying it, sign on the dotted line, price is agreed in euros. That price in euros is going to stay the same. You sign the contract, the property price is going to be fixed in euros there for you. What will be changing in the time between when you sign and when you complete, which could be anything around potentially 3 months, potentially more or less than that time, is the amount that's going to cost you in, just for this example, in pounds sterling. So you'll have your price agreed in euros, and in that time between agreeing and actually completing, the price in pounds sterling will be going up and down based on the exchange rate. So, like I said, forward contracts are incredibly popular. And the reason it's so popular is it takes all the risk out of any potential currency movements. So to go back to the example, you agree today's price, you know your price in euros, you're happy with the price that you can get and how much it's going to cost you in pounds sterling, and we fix that exchange rate for you on that forward contract. And how it works differently to the spot contract is you don't need to pay for the full contract until that final date. At the time that we book the contract, we would take a 10% deposit or up to 10% deposit. That just secures the exchange rate and this secures the payment for you. And then on or before the completion date, pay the remaining balance, the remaining, say, 90%. And then through that whole period of time, you've got full peace of mind that it's costing you X amount in euros, and you know exactly how much is going to be coming out of your bank account as a cost. So it gives you real peace of mind and takes any risk out of the transactions for you. A couple of other options that we do have available are orders. So both very similar products, either an order to buy or an order to call. If you, again, going back to that example, you agree on a property today, you've got your price in euros, but the exchange rate's not quite where you want it to be. You want it to be a little bit higher than where we are, obviously effectively making the transaction cheaper for you. That's absolutely fine. We can target certain exchange rates for you. On an order to call basis, obviously when that exchange rate is hit, we would give you a call, explain that the rate is hit. Do you want to transact? In order to buy, you would send the funds to us up front. As soon as the exchange rate is hit, we would book the transaction and action upon the request that you booked in. The most important thing to say to you on the orders is that we cannot guarantee that rate. Just because we're targeting a rate that's not achievable at the moment doesn't mean that we're going to get there. We are still working off the live exchange rate. We're working from the live market. We can't guarantee it. So it does come with the added risk that the exchange rates may go the other way. But it's a great product if you're up for the little bit of extra risk and the potential upside, that it gives you that slight flexibility. But yeah, there's no guarantee we would get up to the desired level.
That's brilliant, Paula, and it's such a range of services that you offer. It's fantastic to hear about them all there. A question that we always do get asked on this topic is, what are the different fees or charges that a customer would pay for those different services that you mentioned?
So we don't charge a fee. All the transactions will come with no fee. Where we make our money is in the actual exchange rate itself. So if you were to Google the exchange rate for whatever currencies you're looking to transact, you'll see the price online is the interbank price or the market price. That's where the banks will be largely trading with each other, and that's where they transact the currency between the two. We can buy it very close to that from our banks, and the rate we offer to you will always, again, be slightly different, slightly lower. We just make the money between the two exchange rates. So there's not going to be any hidden fees or any hidden costs. The exchange rate that we offer you is fixed, and that's what you will get. So you will get X exchange rate for X amount of pounds into euros. There's not going to be any hidden fees or upfront costs associated with that.
That's great to hear. Thank you so much. And I hope that answers the questions that have come in on that topic. Now, Paul, the $1 million question, which I know is always a tricky one for you to answer, but do you have any idea what might happen to the sterling euro rates between now and the end of the year? Do Smart do any sort of forecasting or predictions on this?
The easiest way to answer that is no. We do write forecasts, so that's something that we do, and we can give good insight into potentially what will happen. But if anyone was trying to convince you that they know where any exchange rate market's going to go, they'd be misleading you. It's an impossible market to predict. You can make forecasts, and you can have a look at upcoming events. There might be potential elections coming up. We've obviously got everything going on with Brexit, and we're still in obviously the pandemic period that we're in now. It's a very unpredictable market at the best of times, but there's a lot of things going on at the moment that can affect it. You could say that if a certain person gets elected, the exchange rates will go one way or another, and you might get that right, but you can't predict how far it will go one way or the other either. And the prediction may be that if a certain person gets elected into an election, you may go, well, that's definitely going to put the exchange rates up. We've seen in the past that actually it will go the opposite way. So again, the best thing is to work on a live exchange rate, look at where they are now. And certainly if you're looking at any sort of transactions, large transactions for a property purchase, the most important thing is to be comfortable with how much things are going to be costing you. As soon as you're at that level where you're comfortable and you're happy, that's the time to start seriously considering things, because obviously if you start to gamble too much with leaving it and then it goes the other way, then it's obviously to your detriment. But yes, we write a forecast. There's some great information in there, but we try and steer clear of saying in 6 months' time the exchange rate is going to be here, because there's such a variance in opinion with those things.
Thank you. That's really helpful. Now, we've obviously talked there about pound sterling and quite a lot, because a number of our customers are UK based and moving into euros. Do you deal with any other currencies or customers elsewhere in the world?
Yes. So in these are the majority of our customers based in the UK. So we always use the sterling euro as an example. But yeah, all major currencies are absolutely fine. There's very few currencies that we won't deal with. So yes, we have a wide portfolio of currencies that we can transact.
Brilliant, thanks, Paul. Now, a question you mentioned earlier about those forward contracts and about people sort of booking in advance with you. What happens if something happens in their buying process? You know, a sale falls through or they change their mind. How can they deal with a forward contract in those circumstances?
Yeah, I mean, as I said earlier, we've been around for a long time and helped thousands of people with this process. Fully aware that sometimes you might get stuck in a chain. Property transactions may fall through if you do a survey and something flags, or you actually just decide to change your mind and you want to go for a different property at a later date. These things all happen. We can be flexible with the contracts. If you're looking to completely cancel a contract and cancel outright, never going to be buying, completely change your mind, we can cancel contracts again completely. That's not a problem. We do have to then sell the currency back to the market back to the original. So again, using sterling euro as an example, if we bought the euros for X amount of pounds and we sell it back and there's a potential loss, if it's a forward contract, that may come out of the deposit, but we would always talk to you beforehand if that was a possibility, let you know what the potential amounts would be coming out of a deposit, and always try and avoid that at all costs. But yes, we can be flexible. If it's something that you're still looking to do in the future, we can roll the contracts on so we can extend them. And so, yeah, we can be very flexible with those.
That's brilliant. That's really, really good to know that there's lots of different options then for customers there. Thank you. And I hope that puts customers' mind at rest with those questions. Another question, which is always a common one that I know that you're asked, what is the difference between the service that Smart is giving you versus using your bank to make this transaction?
There's a few big differences between us and using a bank. So we start talking about what the service the bank offers. I mean, you could go into a branch and speak to a cashier, or speak to a personal banker in one of the offices. That person won't always be an FX specialist. They may be, which is great, so they'll have a good insight into the markets potentially. But more often than not, they'll be just keying in the numbers on a screen and giving you an exchange rate which won't be favourable. And they will only offer a spot contract, so it will have to be on the day. And you know, it doesn't give you a lot of flexibility. With ourselves, you get sort of the complete package really. So we have obviously a wider range of products. You have someone on hand that you can speak to 5 days a week, get advice from them, get guidance, and then if things need to be changed, you've got someone there that can actually give you a sort of a good insight into the markets themselves. The sort of main reason why you would use ourselves, I guess, over a bank is we can be more cost effective for you. If we weren't more cost effective than the banks, we wouldn't exist as a business. So you would see considerable savings by using ourselves over a bank.
That's brilliant. That's great to know and really helpful, because I think a lot of people, are thinking of going the sort of very obvious and traditional route via the bank. So great advice there. Thank you. And my last question, which I suppose ties in slightly to that previous point, which I think is important for customers to know. How do they know that their money is going to be safe when they deposit it with Smart?
Sure. So we're fully authorised by the FCA and governed by HMRC, and we can certainly, if anyone wants to receive those documents, I can send those out. My contact details will be at the end. But if you were to send funds to us, they go to a client holding account. So that will be completely separate to the Smart account. So if when we're holding funds for you, or you're in the process of a transaction, and the unlikely event that anything was to happen to Smart as a business, your funds would just be returned in full back to the original bank that we've received the funds from. So it would just be returned to sender in full. It doesn't count for the 85,000 FCA guarantee, because that's linked to the bank and not linked to us. So if the bank that the funds are being held in, that bank goes bust, then that's where the £85,000 guarantee kicks in. If it's with us on our side, so if Smart were to essentially go bust, the funds are returned in full back to where we received them from.
Brilliant. Thank you for clarifying that. And I hope that again puts customers' minds at rest on that. And Paul, I think that's about all we've got time for this morning in terms of this currency conversation that we're having. So thank you so much for sharing your insight and expertise there. I'd like to hand over now to our second panelist for the day, Daniel Shillito. He's going to take us through a presentation, and then we've got some time for some questions at the end. But just to let you know, Daniel is similar to Paul, very experienced in this field. He's an experienced international finance professional, and has also got a passion for property as well, and can offer advice on that side of things as well. His career began in 1988, so a wealth of experience over the years in supporting buyers, and now he does focus on the expat market and people moving to Italy. So Daniel, I'll hand over to you to take us through some presentation, and then I will get you some questions at the end.
Thank you, Hannah. I really appreciate that. How much time do you think we've got? Let's just understand what we've got, and I'll make sure I create plenty of time.
Yeah, so we've probably got about 30 minutes until we need to finish the session, Daniel. And I would like to leave plenty of time for some questions at the end of that.
Great. Then I'm going to try and make this around 10-15 minutes. I'm just going to put down that on a note here, and I aim to finish by sort of 1:35 at the latest, if I can. I'm sure I can, and I'll be available for any questions. So okay, I'll let people know what we're going to cover today. I think I can change these slides. Okay, so what we're going to do is cover 5 things that I think are most asked and people are most concerned about when moving their life to Italy from a financial point of view. And when I think about a financial point of view, I think about taxes, I think about investments, I think about property, pensions, and that kind of thing. And that's going to be the focus today. So I'm a licensed and registered financial advisor here in Italy. I have been in other countries prior, as you might be able to tell from my accent. Clearly, I'm not born and bred here in Italy, but my wife is Italian, and we came here about 10 years ago. We moved in 2010, and we moved to Milan. And I've been working in financial planning and property ever since. So this is one of the things I often say to people when it comes to transitioning between countries. We deal with a lot of expats and international consultants and business people who arrive here and they don't have the same connections they're used to having back in the UK or America or wherever they're coming from. And so that's where we aim to fill the gap. So we're going to cover these financial concerns today. where you own foreign property and you move to Italy, so you've got your home property still in the UK or back in the States or Australia or somewhere else, how is Italy going to treat that property? Well, they're going to look at tax on foreign pensions briefly, saving and investing from Italy, number 3. 4th thing, people are often interested in buying property wisely. And finally, tax concessions that are available in Italy today, briefly, and all important question, when do I actually become tax resident? And if you're planning a transition to Italy or to be spending time in Italy, that's going to be very important, I would think, to you and to many of our clients. They're often asking these kinds of questions. So let's move quickly on to tax on foreign property. For those of you who are not aware, the Italian government does charge a foreign property wealth tax, and that is at 0.76% on all foreign property held when you're living in Italy. So if you've got a property back in the UK or in the States or any other country, you will have to declare that property, and there's tax payable annually on that property. Okay. Now, for non-EU property, the tax is calculated on a certain tax base, and that is the purchase price of the property. Okay, so the more recent you're purchased in another country, that's going to work against you. Obviously, the tax calculation is going to be higher. The longer you've held the property, the less impact that tax is going to have on you. And the obvious change since Brexit is on that tax base. So it's calculated on the purchase price, but if it's a EU property, if you've got property in Spain, in France, or Germany, or any other of the 26 European countries, it's actually calculated only on the council ratings value of the property. So that's a significant difference between EU property and non-EU property for that tax. Now, once you're faced with this reality and you work out what those taxes might be, you then may have some questions to ask yourself about, what will I do? Am I going to buy property in Italy as well? Am I going to keep my property in the UK? Is it going to cost more for me to keep? Well, as I just explained, it is going to cost you some money in annual property wealth taxes. So you've then got to say, well, what will I do with that property? And that's what financial planning really is all about, is sitting down and saying, what are the pros and cons? Do I need to keep that property in the UK for long-term, for family reasons, or because you might want to move back there in the future? And then compare that to the cost of holding it and the taxes that might ensue. So, for example, as I've got here on the screen, you'll pay the annual higher taxes in Italy. There's a risk of penalty if you decide to not declare a property that you own elsewhere around the world, and Italy gets knowledge of that after a period of time. There could be some back taxes and penalties. There's capital gains tax, of course, to pay in the UK. When you leave the UK and you're outside of the UK for a few years, that property back in the UK or America or anywhere is obviously no longer your home residence, and therefore it'll be subject to tax and capital gains tax when it is eventually sold. So clearly, the closer in time that it's sold from when you leave, the lower those kinds of taxes back in the previous country that will apply. So it's looking at your long-term goals for Italy too. If you're planning on staying and moving or retiring, well, clearly you're going to have a different view about selling or buying your UK property compared to someone who's staying here for a very short period. And that's something that we discuss in terms of financial planning and work out with you as the best course of action and give you information and knowledge so you can make a good decision. Second thing second item that is discussed a lot, of course, is taxes on foreign pensions. So you may be already at pension age, you may be receiving a pension, or you may be planning to in the next 5 years or so, and you want to move to Italy. So what's going to happen when you're here and earning your foreign pension income? Is it taxed in Italy? The short answer is yes. Most foreign income in the form of pensions is taxed in Italy. Now, there are exceptions, and they can be military-style pensions received from ex-military officers in other countries, or when you're working specifically for a government in other countries and you're receiving a government pension for that when you've left that employment, can be an exception as well, and not taxed actually in Italy. But it's it follows very specific rules and laws. So if you've got a pension that's of a specific type that you think may or may not qualify, best thing to do is to get advice. We can assist you with that in understanding whether or not it'll be taxed and help you in your planning. Now, this is often the area where people ask, well, what about, the fact that I'm already paying tax in another country? Does this mean I'm going to have to pay tax in 2 countries? And there's a lot of expats around Europe and around the world who feel that if they've been taxed already, either throughout their lives or even currently on their pension, that why should they be taxed in Italy once they get here? Well, once you become tax resident in Italy, you're subject to the the rules of the land here, and naturally those rules include the Italy's decision about what is taxed and what's not, and that does include foreign pensions. So you're going to have to report them and be subject to tax calculations on that income. So how do tax treaties work to avoid double taxation? Well, essentially, they provide a mechanism for a tax credit. So if you're already paying tax in one country, say your foreign country, and you're in Italy and you're about to report your pension and get taxed here, in the very least, if those two countries have a double tax treaty, which Italy and the US has, and Italy and the UK has, for example, and Italy has with 150 other countries, then you'll be at least able to deduct a credit for the tax already paid, so you just pay the difference. That's how double tax treaties work in a 1-minute summary. So I hope that's clear. If it's not, I summarized a lot in a very short period of time today. So the best thing to do is to reach out, send me an email, ask a question. You can find me online, and particularly I'm very active on LinkedIn. I have my own website with my own name where you can find more information and get in contact. The third most prevalent issue or concern we get is, how do I then save and invest tax effectively? So aside from the income part we just talked about, you might not be ready for retirement, or you may be in retirement and you've got a lump sum invested in an ISA, in ISA type investment, in a managed fund, or in other investments in another country. And so you're going to want to know before you get here, how is Italy going to treat that asset? And when you're tax resident for Italian purposes, well, the short answer is they're going to tax the income from that, whether it's interest income or dividend income. It's normally taxed at a flat tax rate. Or if there's capital gains from the sale of shares or assets within that structure, they're subject to taxes on Italian territory as well. And something like the ISA, for example, is a great product. It's tax effective as long as you're a UK resident. But unfortunately, when you're living in Italy and you become tax resident here, the ISAs do not have the same tax benefits at all, and they'll be treated like another investment. So what's the short answer to this is that in terms of how to deal with it? Well, get advice so we can talk about how you can manage those investments and those obligations. But more importantly, you should know that you can invest from Italy and from Europe by simply taking that money, that investment, and putting it into an alternative structure. And there are alternative structures in Europe that are tax deferred. So you can put the asset into that, it can still grow. It can actually still be quite often managed by the same kinds of investment managers and big firms that you may have been using already, who can still manage those funds, but through a different structure that is recognized by the Italian tax laws as having tax deferment capability. So you don't pay taxes on those transactions, and actually you get really good tax benefits that may even be better than the tax benefits that you're getting today in your current country. Selling and buying property, I'm up to number 4. I think I'm doing okay for time. I've got a few minutes. Number 4 is buying and selling property. Clearly, the biggest decision I think anyone needs to make is where they're going to reside, whether they buy or rent and that kind of thing. And these are big decisions. They're not easy. And the Italian property market itself is not the easiest to negotiate. Just any 5 or 10 minute search online will show you that there's different opinions. There's different people have different points of view about the process, how long it takes, which professionals you should use and which you shouldn't. There's different timelines. For example, every property purchase in Italy has its own timeline and set of circumstances. People don't come into the transaction with the same expectations. So it's a little bit like an open slate. You can say, okay, well, when do we want to settle? Is it going to be 3 months? Is it going to be 6 months? Is it going to be 12 months? Because I want the Italian seller wants their 18-year-old son to live another 12 months before they leave the house. And so they may want to set up a sale that will actually eventually close in 12 months. And you may not know any of these things at all, certainly not by searching online. You have to get into the transaction, understand what's going on, talk to the agent or talk to the owner and understand what their needs are, and then create a transaction between you. It's not as straightforward or simple as perhaps what you might be used to. They have a different approach to property in Italy. They hold property for a long, long time. They don't tend to turn it over very quickly or invest in a portfolio of properties. So there isn't the same urgency I've found that you might expect if you're coming from the UK or the US or Australia, for example. So consider the pitfalls when you're looking to buy and get some help, and try and perhaps approach it as a process or as a project. And so that's what we realized there was a need for here in Italy about 5 years ago. And when we set up D&G Property Advice with my business partner, Giovanni. We've got lots of resources about buying in Italy, how to do it, how to approach it, and we can show people the way through the Italian property maze, if you like. I'm not going to focus on that today, but just to let you know that it's there. And finally, tax concessions, the next most relevant thing asked about in terms of your financial life in Italy is tax concessions in the tax environment. People will know Italy is not renowned typically for being a low tax country. It is relatively complex, and the taxes do exist, and there's progressive rate taxes as well. However, today, and since probably about 18 months ago, we've seen 2 or 3 really interesting tax concessions arrive. Perhaps the most interesting is the first one I've listed here, if you want to take a screenshot or something, which is the concessions for new people working in Italy, where 70 to 90% of your income can be exempt completely from tax, and you only pay tax on the difference. And that applies for 5 years, and it can be extended in the case you buy a property in Italy, or if you have children under 18, it can also be extended for another 5 years. So really interesting tax concessions to try and attract people to come and work in Italy. There's also incentives for pension age people earning pensions today. If you've got a foreign pension you're earning and you come to Italy, they'll only tax that to the level of 7%. Okay, and that you won't have to declare your other assets that are overseas or outside of Italy as part of that regime as well. So quite attractive too. And then finally, I just want to talk for 30 seconds on the question of when do I become tax resident. Very important for you. It's worth getting advice, if about nothing else in moving to Italy from a financial perspective, then to understand when will I be taxed in Italy. And it's not as straightforward as a number of days rule, okay? Italy does not meticulously count the days and expect that each year you could have a different day count, and therefore you're tax resident in one year and not tax resident in the other. They don't apply that methodology. Instead, they have 3 factors that they use to determine tax residency. And if you meet any one of those 3, you can be deemed tax resident. So you need to be aware of them all when you're planning your affairs and your movements between countries. One of them is an 183-day rule, where if you exceed that amount of time, if all other factors are sort of not impacting the situation, you could be deemed tax resident. The other ways are simply by registering your presence at the local comune. If you go there, you register yourself. You may be in the process of applying to be part of the public health system or to get an identity card. That registration process will result in the assumption by the government that you're tax resident. And finally, there's the place of your social and economic centre. If it isn't by default in another country, and therefore it could be concluded that it's in Italy, then the government can claim you're tax resident in Italy there. And finally, this chart, you might wonder what it's doing here. I threw this in, I'm kind of thinking, despite all the financial complexities, investments and pensions, and they might tax and they might not, I'd like to say to people, besides all that, focus on the reasons why you're coming to Italy and the many, many beautiful reasons why people move to this wonderful country. And this is just a short list of some of them: the climate, the nature, the culture, the lifestyle, the cost of living, which are very reasonable, food and wine, and it's a very, very attractive place to retire. So I'm going to leave it there for questions, Hannah.
That's brilliant. Thank you so much, Daniel. And certainly, yeah, you if you hadn't already sold us, you definitely sold us there on that last slide.
Well, I don't think you can sell anybody on. To be honest, I don't think you can sell people on financial benefits. It's just more like an information. There's an education session, right? But you got to keep the mind on the goal of why it is you're going in the first place. And generally, it's not for financial reasons, right? You just need to know all that stuff.
Of course, absolutely great advice. Now, a few questions that have started to come through from the listeners today. So it really seems like someone is obviously going to need a financial advisor to support them through this process. Do they need an Italian advisor, or can they use their advisor from the UK?
Okay, that's a good question. Look, I say this a lot about Italy because people ask me, when they come to select a tax accountant, for example, or a commercialista here, and I warn them that you'll need someone to do your tax returns to help you when you're in Italy, for sure. But be warned that they're not experts in UK styles of income and how things are taxed in other countries and how they'll interpret that income. And the same goes, I think, for UK. Unfortunately, you're not going to find your average UK accountant knowledgeable about what Italy's going to do and how they're going to treat your income either. So I think you do need someone on the ground in Italy that understands the tax and investment environment here to be able to interpret it for you and say how they're going to look at that. I think, and also when it comes to financial planning, there's actually an issue since Brexit, particularly for British people, that financial advisors in the UK are prohibited from acting actually for Italy-based residents unless they have a branch here or they have a license in Italy, and because there is no arrangement on financial services right now between the EU and the UK, so that's the default situation for that.
Good advice, Daniel. Thank you so much for that. Now, you touched on it a few times through your presentation about declaring investments. You mentioned that ISAs perhaps aren't the most sort of cost-effective type of investment, but do customers have to declare things like their ISA investments when they're moving to Italy? Because obviously we are fortunate that they're currently tax-free in the UK.
Yes, they do, because it's treated like any other tax or financial asset. And there's actually a particular module, a particular form that forms part of the tax return in Italy when people lodge their annual tax return, and it's designed for foreign assets, and all kinds of foreign assets and investments do need to be declared there, and that includes ISAs. It doesn't matter to the Italian government whether it has tax benefits in the UK or in America, whether it's what kind of pension, etc. it might be, a bank account or not. You do need to declare those assets, and so the value of planning is working out when you have to declare them, and which will be related to when you become a tax resident. And therefore, you need to understand, if you arrive at a different time during the year, will that make a difference? And the answer is yes. So with some planning and talking to someone who understands the Italian environment, you can plan when you arrive and therefore when you may have to lodge and report. And you might find that doing that exercise reveals you may not actually have to lodge a tax return or pay tax for maybe 18 months into the future or 2 years into the future. That can be the case sometimes. And if that's the case, then you've got time to decide what to do with those investments, for example, and if you invest them into something more tax effective or how it influences your residency plans.
Thank you. And I guess a similar question might be for premium bonds. Again, any winnings from premium bonds are tax-free in the UK. Does Italy have a similar scheme, or should people keep the premium bonds and then transfer the money over and risk the tax? What would your advice be in that situation?
Right, that's a very specific question about a very specific product, and I think that today's session is more general than that in terms of how we address assets. I think that that's very specific advice, and if I give advice about that particular product now, it may be right and appropriate for one person, but not right or appropriate for the other person, because we really have to look at their overall financial situation, how they're taxed, what their plans are, and that kind of thing. So, but the first part of your question you mentioned, does Italy have something like that where winnings are not taxable? I'm not aware of it. It's not something that's certainly prevalent. There's nothing like the popularity, for example, or regular use of something like the ISA in the UK.
Great, thank you. I totally understand that about it being quite specific. So for people asking that question about premium bonds, it has come up a few times. We would recommend that you do get in touch with Daniel directly, and he'll be able to answer a query there. So thanks for those questions. Now, Daniel, I'd like to move on to the topic of inheritance, and I've got two questions on inheritance for you.
Sure.
First of all, what would happen if somebody was in Italy, living there, resident in Italy, and they inherited money from family based still in the UK? That's sort of part one of the question. And then part two of the question is, what are the inheritance laws for any property or money that they have in Italy when wanting to pass that on to their children?
Okay, so again, that's a pretty complex question, and you wouldn't approach this in any kind of general sweeping conclusions. You really need to have complex tax advice from a qualified tax advisor. Okay, so whilst we provide financial planning and international tax assistance, we don't provide specific tax advice on the territory unless you're a qualified tax advisor. So that particular consideration would need input from either an Italian based tax lawyer or commercial solicitor that we generally work with those people and can put people into contact with. So I need to say that first. That's really important. I can only make a couple of general statements about inheritance and how it affects your planning decisions. So the first thing I would say is that the inheritance tax regime in Italy is less onerous than it is in many European countries, and including the UK. So, for example, Italy does not have 40% UK inheritance tax that the UK does. And once you leave the UK, your assets that are domiciled in the UK are subject to that tax. So it's important to note the difference. There's quite a healthy exemption from the first €1 million in property in Italy that is exempt from inheritance tax. And then the questions about what to do and how to plan the succession, they really are one that a lawyer needs to look at for you, and understanding what your intentions are and how that will affect it. Because up until Brexit, you could make an election as to also which country's laws apply to the inheritance. And that at the moment is a little bit contentious since Brexit about whether or not you can still make those elections. So it would be remiss of me to give specific advice about what's going to happen in a specific case like that. But you need to get that's actually legal advice as well.
Thank you. Thanks, Daniel, for clarifying. And for anybody that has got those specific questions on inheritance tax, do let us know, and we'll make sure that we're able to get those queries answered for you. Now, a last question for you, Daniel, just about bank accounts. Can you explain a little bit about the process of opening a bank account in Italy, and any advice that you have on that topic?
Okay, so typically when you approach anyone in Italy on this topic, even real estate agents or lawyers, etc., the first advice that you'll hear is that you've got to be here on the ground and have residency to open a bank account from an Italian bank. And that is the standard and most relevant piece of advice that anyone can give, and I would give as well. It's going to be faster that way. It's going to be easier that way. Italian banks, the traditional banks, and especially the not internet banks or online banks, do require quite a bit of paperwork, and they want to see you've got residency here and maybe even evidence of work, etc., as well, because they just don't want to open, and their policies don't allow them to open accounts for people that might be here on temporarily, or a tourist or someone that's thinking of buying. They don't open those products easily. So that's the first comment I'd make on that. It's not impossible to open an account if you don't yet have residency in Italy. There's a couple of banks that will consider it, but it's more of a rarity than the standard process. Now, that doesn't mean you can't get things done in transitioning your life to Italy. That doesn't mean you can't use alternative methods. That doesn't mean you can't use other banks that are outside Italy or outside the UK or even Germany. There's online banks that we use for our regular banking that may be able to set up an account for you with your passport and other forms of paperwork and identification online.
Brilliant. Thank you so much, Daniel. Thank you for clarifying that. And it's been a fantastic insight that you've shared with all of the customers today. And as I mentioned, both Paul and Daniel's details are now on screen, and we do recommend you get in touch with them both as soon as possible to discuss your personal requirements and plans for your relocation. Thank you, everybody, for joining us today, whether it was live or on demand. We're really excited to be able to support you with your journey to Italy. And thank you again to both of our panelists for their fantastic insight and info. If you do want to listen to a replay of this session or any of the other Your Overseas Home webinars that we've done, Daniel and Paul have featured in other sessions with us as well. We've got lots of advice on different stages in the buying process, on securing mortgages, legal requirements, visa requirements. So there's a wealth of information on the Your Overseas Home website, and we will pop a link up on the screen shortly for you to have a look at that. But that's all we've got time for today. So thank you again for listening. Thank you again, Daniel and Paul, and we wish you a very happy move and relocation to Italy. Bye, everyone.
Thank you. Thanks, Hannah, for all your help. Bye, everyone.
No problem. Bye, everyone.